Welcome to Market Momentum Tutorials. I hope you've watched 1 and 2. Come to the website and learn more. Once you've watched all 8 or 9, you'll find new trading levels that you won't find on normal charts.
Welcome to the tutorial on momentum waves. This is going to be a brief explanation of waves and how we look at them. This is a T-bond daily average differential. We're going to look at momentum ranges as well, and we look at diffs first. And again, here's the classic movement in A, B, C. This is how we measure momentum waves in threes, waves within waves. They all come in threes. One could argue say we have 5 wave movements, for example, 1, 2, 3, 4, 5, but we don't use 5 waves, we use 3 because that's generally what momentum moves in, and this is the classic movement in a normal trading market. Here you can see it gets a bit more complex. You have an A, B, C. Very often in one of the waves will be a singular wave, like this B leg, for example. I mean, in this case, it was a singular waves all the way through to make the one wave, but to make this wave, for example, it was a singular wave A and B, and the C wave was the 3. And it's the same in this case, and the same in this case. A, B, C, and back to a classic A, B, C. Now, of course, this doesn't necessarily reflect the lows in the market at the time. In terms of a normal chart, I'll give you just show you here, for example, this ABC movement here is this ABC movement, and you see this made new lows, but the market didn't. It was diverging there, and indeed again the opposite here. We had an ABC classic movement at the end, and on this chart, that's the A and that's the B, with a diverging low. So things do change, but we knew once a classic movement had been completed, the market would turn up, which indeed it did. And we can use these wave movements to generally look for the turns in the market. And one thing to look at this chart, we can say a few things about it. First of all, it's a classic chart. It's a lovely chart to trade. There's nice volatility. We get nice big movements in the waves, and they're very easy to count. And used in conjunction with the momentum ranges, helps us predict turns and everything else in the market. Second thing about this to note is stretch levels. We talk about momentum stretches. And over a given period of time, you can determine what the average stretch period is in the market. It does change over time, but in general, for example, on bonds, this doesn't tend to go above this sort of level or below this sort of level on a stretch. And it's great when you have those stretches, because it's a very nice time to put on a position, especially if the momentum range is set up right nicely for you, and you can trade it much easier. Now, I'll show you now a chart where the volatility suddenly changes. This is the S&P chart, and as you can see, we had nice volatility, nice little wave movements, and then all of a sudden, bang, we go into a complex movement, and the ROC has changed, the rate of change momentum has changed, but we still have our patterns, even though it's smaller. And we believe the market's building a top, and until this sufficiently closes below this channel line, the top, will continue to build through this. But once the pattern's complete, it should break either up or down, depending whether we've got a bigger B leg to come. But we can see this in bigger time periods, because the one thing you need to look at when you're looking at these is multiple time periods, MTPs, and you need to look at the daily, the weekly, the monthly, to give you an overall picture of the market. If the weekly is short and the dailies are long, then you need to be careful trading on the long side. You can trade it as long as it's fine, but the weekly is usually the bigger and the more important indicator of the overall trend, and you need to trade them against and see where you are. For example, if the diff is quite long and it's going up on a daily nicely, but you're coming up to a momentum range on a weekly trend line on a weekly and the diff is pointing down, then you know that wave isn't going to go much higher. Now this is about a brief show of what the waves look like. Let's have a look at momentum ranges. Back to T-bonds, you can see the momentum waves within momentum waves. There's a simple ABC, but then you can see there's an ABC inside there. And we got a little bit more intricate here. Then an ABC movement down, there's a blue A, a blue B, and another ABC movement down. Now, of course, the momentum range is dictated by the range of the day, and the actual patterns are slightly different, but they come out almost the same. For example, here you can see where the B leg was that we had on the diff earlier, which is this leg here, and this was the buy area. Had a momentum gap, came down, it filled a momentum gap. Momentum gap, something we'll talk about later. And this low actually is the same as this low here. As you can see, those 2 days of the low. It did make slightly lower lows, which is what we were expecting, as the daily average was to turn up, because the diff was very stretched and it was very sharp, and it did build its low. But again, similar patterns. Of course, we have mom lines, which we'll talk about later. For example, here the diff turned up and was also above a mom line. This was when the diff closed long, was the night to go long, and it got the move going up the next day to our target area, and also just matched this A leg completely. So it could either be, we classified it here as a C, because it has to either match that exactly or go slightly higher to be a C. But alternatively, this could have been a B. This could be an A, B, and a C down here, because it didn't match it exactly tick for tick, up to plus a point over neutral at the time. Let's look at something a little less complex. Back to the S&P daily. This is the daily momentum range on the S&P. It's not quite so busy as the other one, and it's a little easier to read how I've numbered it. But again, you can see where this complex area is that was on the daily average. Looks erratic, but you can trade these pretty much on a daily basis with the momentum lines. But this top building here does make life a little bit more difficult, and that's why we prefer nice volatility in the market to give us much easier patterns to trade. Now, we're talking about multiple time periods before. Let's have a look at some longer term time periods. Here's the T-bond weekly momentum range. Again, as you can see, it's much easier. An A, a B, and a C leg down here, and within it there was an A, B, C there, A, B, A, B, C, A, B, A, B, C, simple A, simple B, and so far what we can consider to be a simple C leg. This has actually had an outside week on an inside week. It's usually a sign of an end of move, by the way, but that's another tutorial. And we've completed a pattern. Now the question is, of course, whether this is going to extend into this is an AB ABC, but this particular move sort of says no, really, because it had an outside on an inside week, which doesn't happen very often, but it's usually a sign of an end of move. Doesn't suggest that it will happen. In fact, that's an A, that's a B, and we're going up for a little C leg, and it could turn out to be a bigger one. But that's you can see on the bigger picture where we are. Let's have a look at something a bit longer.